Judith Cochrane to move the motion.
I beg to move. Mr. Principal Deputy Speaker, there's barely a media day that passes where the condition of our local economy is not lamented, the regional outlook for growth not reassessed, or provincial access to finance and lending not critiqued. Therefore, I feel it's important that as an Assembly we give this issue our focus and discuss how our Executive can use its influence for the better. As I stand here today, I have no doubt most members will have had first-hand experience with local business people facing financial challenges and developmental hurdles in the current economic climate. We are aware of the diminishing availability of borrowing, particularly to small and medium-sized businesses, which fulfil such a crucial role within our local economy, accounting for 98% of the total number of businesses and employing 67% of the workforce. In establishing a global context for the motion, however, I invite members for a moment to turn their focus away from the familiarity of the local context and instead take a fresh look at recent developments in both Europe and the United States. By referring to these actions does not mean that I'm complacent about the current state of difficulties. I'm not saying that we're in recovery yet. However, these actions do definitely help to stabilise things. We must therefore contemplate how Northern Ireland might capitalise on new signs of stability in these markets. And this motion today seeks to create a positive context about companies expanding and exporting and being facilitated in doing so through finance flowing to businesses. Members will be familiar with the Eurozone crisis that has been bridling for some considerable time. However, some might not be as well versed on the recent positive strides that have been made by the European Central Bank. Following its Governing Council meeting on the 6th of September, the Bank announced a programme of outright monetary transactions, or OMTs, a bond buying scheme designed to build upon and complement the previous Securities Markets Programme. Much the same as the SNP initiative, in simple terms, the ECB will continue to buy up government bonds on the secondary market, in other words from investors, rather than directly from governments, which will help to contain these countries' public borrowing costs. The result of such proposals from the ECB is genuinely helping to create a growing sense of optimism within the Eurozone, alleviating fears not just regarding investment interests, but also business interests. In the United States, in only the last few weeks, the US Federal Reserve has announced new measures underpinned by its third round of quantitative easing, or QE3. Quantitative easing works through a number of channels to stimulate the economy, such as by maintaining low borrowing costs for households and businesses. At the same time, the Federal Reserve has made an enduring commitment to keep national interest rates at exceptionally low levels until at least mid-2015. These actions represent a statement of intent from the US Federal Reserve that for the first time it is linking its actions with what happens to employment rather than to prices. And reading between the lines of the recent announcement, it appears America is willing to tolerate an elevated level of inflation in order to bring about a fall in unemployment and a return to strong growth. While the US approach arguably employs different techniques and practices, its overall end goal is fairly in tune with what's evidenced in Europe. The priority for both is stability. Geographically, culturally and politically, we may be somewhat removed from the situations unfolding in both the US and Eurozone. However, what we can and should be focusing our efforts on in light of these developments are the potential opportunities. Economic stability and business opportunity go hand in hand. And regardless of our size, our history or our politics, we as a society must actively be seeking to take advantage of this renewed economic horizon. In Northern Ireland, we have a range of established SMEs with boundless potential. Yet this potential and enthusiasm is not always matched by financial backing. Yes, we have a small population, but this is not something that should confine our growth nor our long-term objectives. Provided the European and US measures are effectively adhered to, any success in increasing employment and confidence and restoring growth will bring with it a subsequent increase in private demand and a rise in the demand for overseas exports. Mr. Principal Deputy Speaker, the points I'm making today are consistent with the Executive's economic strategy, which sets out a vision for an economy where a growing number of firms compete in global markets. The strategy emphasises the need for deepening our export base, focusing on areas with the greatest potential for growth, such as agri-food and ICT, and the targeting of developing and fast-growing economies as destinations for our products and services. While such a vision outlining the way forward is essential, key to any progress will be the measurable finance available to nurture and grow our private sector from the bottom up. Therefore, I'm seeking to highlight exactly where our executive can use its influence to ensure that our Northern Ireland businesses are connected efficiently to finance sources and their use is maximised. The efforts of InvestNI in this regard, with the access to finance strategy, go some way to filling in the blanks for the next 5 years at least. In recognition of the growing difficulties for SMEs to obtain bank loans and the decreasing availability of grant funding, InvestNI plan to offer business funding between £1,000 and £2 million. Offered through 5 separate funds totalling more than £100 million, the focus of each fund and the level of support will vary according to need. The Northern Ireland spin-out funds, for example, are targeted at start-up and early-stage businesses with awards between £50,000 and £250,000, while the co-fund Northern Ireland is designed to co-invest in SMEs along with business angels and private investors to the tune of between £250,000 and £450,000. Perhaps the most significant fund in relation to this motion and the desire to deliver progress in our export market, however, is the Growth Loan Fund. This fund is managed by White Rock Capital Partners and has been established to lend up to £50 million to Northern Ireland firms over the next 5 years, utilising funds from InvestNI and Nilgosk. Just last week, we began to see the positive impact of this funding stream with the first approved investment from the fund awarded to the Dunmurry ventilation systems manufacturer Brookvent. The fund, which lends between £50,000 and £500,000, requires companies to be based in Northern Ireland, demonstrate growth potential, and generally be in the manufacturing, engineering or tradable services sectors, benchmarks all clearly evidenced within Brookvent. The local firm, which employs 49 people, has recently opened offices in Poland and Vilnius, Lithuania, to look after Baltic markets, and it's anticipated that the growth loan investment of £425,000 will help them to accelerate their growth strategy in overseas markets and research and development. Further statistics for this fund reveal that since its creation there have been 112 loan inquiries, with 6 additional deals due to complete in the next few weeks, ranging from £100,000 to £500,000, totalling £2 million, including the Brookvent Award. In a time when so much negativity and finger-pointing is focused upon limited bank lending, it's prudent that we should be exploring and indeed promoting alternative lending options, such as venture capital and debt financing, to help rebalance and rebuild our economy and to drive private sector growth. Bank lending is certainly essential to small business sustainability, and news of the proposed £1 billion business bank, along with the funding for lending scheme, are not without their merits. However, we cannot overlook the limits of our political clout, and while we can scrutinise and make recommendations for banking practices, our capacity to enforce our will upon banks is limited. Other means of financial assistance, such as the Growth Loan Fund, represent a greater opportunity for this Assembly to have an impact and must surely be given the appropriate backing if they are to meet their aims in boosting business confidence and helping local companies to realise their growth potential. As stated before, the Growth Loan Fund was originally designed to lend £10 million per year over 5 years. However, it's now thought, based on the current demand, that up to £15 million per year could be reasonably awarded through the scheme. And I'm aware that InvestNI has been informed of this need, and this is something that we as members can use our influence on. However, I realise that the worry for some is that businesses will not be connected to this opportunity, and we could see more unused funds being returned at the end of another year. It's evidently clear that the demand for this fund, and undoubtedly others, is significant. Yet, alarmingly, many of our local businesses seeking developmental funding are not aware of the schemes. This is not a criticism of InvestNI, but there does appear to be a disconnect between the fund provider and the fund recipients. Even as a member, I often struggle to connect businesses in my own constituency to the most appropriate group. Therefore, what perhaps is needed is a funding-focused intermediary organisation, a body that could operate as a separate, independent and non-political coordination point which businesses can turn to. A body who can ask the questions and match the funding with true corporate finance expertise, perhaps even with a specialist funding arm. I don't believe that this is something that needs to be complex, but it would need to be well advertised. There's also a problem with higher level lending in the £2 million to £10 million area, and I'd be interested to know if there are executive proposals to deal with this issue. Positive steps are being taken, but there is clearly more work to be done in order to open global markets and connect to funding sources. Mr Deputy Speaker, on these grounds, I would call upon the Executive to use its influence and faculty to explore suitable alternatives to ensure businesses are connected efficiently to these funding sources and that their use is maximised? Thank you.
Robin Newton.